Hi, it's Peter Temple for Monday, March the 21st, 2016. This is the market report, and what I'm going to do today is start in tight here on the S&P 500 and just talk about what's happening immediately. Now, I have a turn date from my good old friend Andy P, and that's his market timing report that you'll find on my site, and he is hugely accurate, of March the 22nd, which is coming up as Tuesday. That is an equities turn date. The 18th, 19th, or 17th, 18th days, which I had cited last week, were for the euro and the dollar, and I thought that that might translate into the equities, but that didn't happen. And not that much happened with the dollar and the euro either. So we're looking at the 22nd, and that is his major turn date of the month. So I think that's probably what we're looking at, and the market tends to tell me that that's probably the case. So let's start with looking at this wave up. This is the one from February the 11th. And this is this big wave 2, and we've got an ABC counter trend configuration. And this is important because I'm going to get into an alternative scenario at the end of this video. And it's important to note that this wave up is in 3 waves, which means it's a corrective wave and it's going to completely retrace. So we've got this first wave up in 3, then we've got this wave, second wave up, the C wave, which is in 5 waves, 1, 2, 3, 4, and we're in the 5th of the 5th right now. And I'm just going to jump in a little tighter here, and we'll look at these final waves. Now here is the 5-minute chart of the S&P 500, and you can see the top of this wave. This is wave 5 here. This would be wave large 4 of this C wave, going up to the very top. So we've got a 1, 2, and I think this is the 3 here. There's a little bit of a question mark as to whether this is the subwave 3, 4, or this is the subwave 3, 4, and we are coming back down here to the previous 4th. The problem with this 4th wave is that it did not come down to this previous 4th exactly, and so it's short. And so I think at the very least we're going to come back down here. So if I'm looking at Tuesday, it would seem to me that a wave down here, possibly on Sunday, and then heading up Monday into Tuesday would probably finish off this wave. Typically, we will get a last final wave up here, which will be 1.6 times the length of this wave here, which takes us up into the 2060s, somewhere in that range. Or we could just top right here. So it really depends on what happens to this wave and whether it comes down here and you do your measurement from the bottom of it. So we are in the 5th of the 5th of the 5th pretty well now. So we're in the final stage, and this thing is going to top in the next few days and head down. There's no question about that. Let's look now at the bigger picture. This is the S&P 500 daily chart, and let's look at where we're actually going to go, in my opinion. So we got the big rounded top in this market, and you can see that we've come up and hit a trend line here again with this second wave. We also had a second wave up at the top here, so this being our first wave down, second wave here, and we had this ABC retrace, and we had 3 waves here. So at the bottom of this I said, well, we're not going to a new high, because a new high, to get there, you have to have a wave that goes up in 5 waves. So because that's part of this 5 waves up at the end here, which is always an ending wave. So an ending wave is always in 5 waves. We had 3 waves here, and then we had 3 waves down, and we had a C wave up in 5. We were expecting 5, except it truncated right here. And that, of course, is our big question mark in terms of this entire market. This should have gone up in terms of finishing off this wave, and it did not. And so we've got this 3 down, which really tells us that this wave is actually in 3 waves technically. So that's one of the issues we've got, and I'm considering it a truncated wave just because of where we are in the market. It lends some credence to this alternative count and going to a new high, but I'm going to come to that next. Just look at, with my count now of this being a bear market, and heading back down, I just want to talk about where we're actually going based on this bear market count. So our next move, this being a second wave, is down and into a third wave, and I've said that this wave up is in 3 waves. The down wave, and how you get there, you would measure the length of this first wave, this being the start of a third wave up at the top here, and we've had 1 wave down, which would be the first of the third. So this wave down being the middle of the third, you would take this measurement of the length of this wave, and then you would extrapolate it and take 1.6 of the length of this down. So this suggests that we're going down to 1574 in the S&P 500. It also could expand to 2.6 times the length of this first wave, and so it could go down to 1280. So those are the first 2 targets based on my bear count. Okay, next I want to take a look at this alternative count and show you why I can't make it work. Now this is where the alternative count comes from. This is the daily chart of the Dow, and what we're looking at here, if we talk an alternative count, is that the large wave up to May 20th or so of last year, 2015, was actually a third wave rather than being a fifth wave. That would mean that this would be a fourth wave, and we would have a fourth wave triangle here going up to a fifth wave. And this all makes sense. There's nothing wrong with this count. This is very possible. We would then come down to about the 15,500 mark in the Dow, and then we would head up in 3 waves to a final fifth wave. So that's fine, but what you have to keep in mind is that all the other indices, the major ones, have to do this, and that would be the NASDAQ. Not as much the NASDAQ. It could have a slightly different count, but I've never seen that happen before. Typically, if one goes to a new high, they all have to go to a new high. And so we're looking at the S&P and the NASDAQ, and I want to take a look at the S&P next. Now here's the daily chart of the S&P 500, and we're looking at the same scenario as the Dow triangle. So if the Dow triangle works and is going to a new high, the S&P has to do that as well. But the S&P has a different configuration in that it's come down in 3 waves, an A, B, C. You could call that a flat, 3 waves, 3 waves up, and supposedly 5 waves down. And then we've got this wave up, which would have to be the first wave, and it's just about to end now. But the problem with this wave is that to be an ending wave, to go up again in 5 waves, this also has to be a motive wave, and it has to be in 5 waves. That's the rule, and it's a hard rule. So the problem with that is that this wave is in 3 waves, which means that it has to completely retrace. So our bottom line is that if you're looking at this, if it comes down in a second wave, which is what has to happen, and it goes up again in a third wave, it comes down to the 62% level, and this is 1900. So what we'll be looking at for this wave coming down is to pass 1900. If it passes 1900, then clearly we're not going back up to the top. We're going to retrace all the way down and do the bearish wave scenario. So those are our options. If this, in fact, turns around and goes up in a third wave, what you're looking at is going way above 2320, about 2315. That would take us, that would be the third wave. Then we'd have a fourth wave down here, 38%, and a fifth wave up. And I haven't extrapolated where that would go. But if you're looking at the math in terms of the time, that would have to take us into the beginning of next year. Whether the market can hold up that long is another question that I've got. Looking at where the overextension of credit is and where the leverage is sitting right now, which is far above the year 2000, that top, and it's way, way above 2007. We have got a real problem with leverage and overall debt. So those are the 2 scenarios, and if you were to look at the NYSE, which I will go to quickly, that's come down now almost to the 50% line of the previous wave up, which is here, which is way below the 38% line. So that one's going to be a tougher. It can go to the top, but it's come down much further than you would expect a fourth wave to come down to. And that's my wrap up. So I have got the bearish count as way higher than the bullish count. And so we'll keep the bullish count in mind, but I think that that is way off on an alternate in terms of percentage. I'd put that well under 50%, maybe sort of a 15%, taking everything into account. That's my take on where we're going. Now for my last chart, actually the second last chart, I want to look at the global Dow, because this one is the big one in terms of where I think we're going, and this really is one of the ones that is leaning me towards very much the bearish count. We had a very motive wave down here, which came down in 5 waves, 1, 2, 3, 4, 5, and that's a very typical looking motive wave down. So that's wave 1. Then we came up in an ABC, wave 2. Then we've had this wave down, which also is a motive wave, 1, 2, 3, 4, 5. But this wave here, the last 5th wave, was an ABC configuration. And I sort of got a question mark of a 5 here. So this very well could be the start of a second wave. Let me get to the second wave in a moment. Typically what you'll have when you have it getting into a third wave is you'll have a first wave down, which will be the first wave in this case of this configuration. We had a double top here. And then you will go up and do a second wave, but you'll have the first wave of the third, which follows, is usually the is usually the same distance as the first wave. So you'll have 2 waves of equal distance before you get into the middle of the third. In fact, that's what we have here. So that fits the scenario of a first wave and a first of the third. But now what we've got here is we've had this wave that has come up in 3 waves so far, and this would be our second wave. But typically what happens when you're going into a large third wave in the middle of a third, you will have a double second wave, which is kind of what this is shaping up to be here. And I see this over and over when we have bear markets. You'll have this dual second wave, which means that the third wave down is going to be even larger. So overall, I see us going into a third wave down here. I can't see any way for the global Dow to go back up again, because we've had 2 sets of motive waves down. You would need to have another wave. You don't have 2 motive waves in a row. You have 3 motive waves, or like 5 waves down. So this would be 1, 2, 3, 4, and then 5 down. So I'm seeing this as having nowhere to go in a bullish way. This one's going down. So that leads me to the overall look at the market in total as being in a bear market, and the next move down overall for everybody is a big third wave. So I've got one more chart I want to show you, which is of the euro, and that also sort of supports us being at a very big juncture in the market right now. So I've been following the euro now for quite some time, and I've been sticking my neck out saying that no, this thing is not going down immediately. It is still correcting, and in fact I saw it going up past the 38% retrace line from the very top way up here, which I'm not showing in this particular chart. But it came down in a first wave. It did not retrace exactly 38%, which I usually consider to be where it absolutely has to go in order to fulfill the Elliott wave mandate. But maybe this is good enough. In any event, for the last 8 months since September of last year, this market has been moving contra to the US market, almost in lockstep. So my count brought us up here, and these were all motive waves, which turned into what I expected to be a third wave up. Well, last week, this wave only went up in 3 waves and cut short. I expected it to go up to about this point here, and then we would get another wave down, and then a big third wave up. But it went up in 3 waves, which all of a sudden put on an Elliott wave alert and told me something else is happening here. So I think we have reached, I went neutral last week. It's been very good. It's followed exactly where I thought it was going until now. And now I'm looking at this and saying, well, maybe this is a first wave down, although this is a very strange configuration for a first wave down. Could be because we had a very obvious ending diagonal here, and we've got this double pronged 2, which overall makes it look like a 3. So that I find a little bit challenging. But we'll go, I'm just going to zoom in and give you the count that I'm going to change around and go with now, which this being a 1, this being a 2. This is backed up a little bit more than 62%. We've got a double-pronged second wave, but the problem I had with this going higher is this turned into a 3. Let's jump in a little tighter and then we'll end this off. Jumping in to a 2-hour chart on the Euro US dollar, you can see we had this C wave up and then we came down in 3 waves here, and I was expecting a motive wave up at this time. We actually did a double bottom. And this wave up then would have been the start of wave 3, would have been the first wave of wave 3. It's actually in 5 waves. I've now labeled this an A because this next wave down took such a long time that I got a little bit nervous that we were going to have a good looking 5 waves up. And in actual fact, what happened is from here we went up in 3 waves. What I was expecting was to go up in a first wave, second wave down, third wave, fourth wave, fifth wave up to this point. But we only did 3 waves, and so now I expect us to go up and go to this top to do a double top here, and this would make this a second wave. The next move for this wave is down. So if that happens along with the market topping, that then changes what the dollar and the euro US dollar are doing. They will now start to move in tandem with the US markets, and I would see the euro going to a new low and the dollar going to a new high. And so that's the long-term view and has been for a long time. And we were going through this correction, but now I think the correction is over and we'll have to see what happens. So I'm somewhat neutral. If we go up to this point, 1.137, then I would expect a turn here. If we in fact turn down, then I think it's pretty well a given that we're going to go down in the euro to a new low. So that would be a great trade because it's going to go for a long time. Same thing with the dollar going up. So that is my longer than expected report. This is a truncation point, or certainly a big turning point for the US market and currencies. And you'll see that the US dollar CAD, Canadian dollar, is also turning, and that should head up. And I'm also seeing the Australian dollar sort of finishing up its 5th wave, and it should turn down. So I'm seeing everything turning in the currencies that are US dollar based. Good trading. Look for a very volatile week coming up, and I have Tuesday as the major turn date. We'll see what happens.